Hello everyone, welcome back to the channel. You guys know that I have this series where I talk about stocks that I might buy every month. Well, this month I decided to buy Salesforce, Dropbox, Airbnb, and Shift. Already started a position in Salesforce and backed off from Airbnb since it opened really high and will wait longer until it drops. I still haven't invested in Dropbox but already started a position in Shift. So today we are going to talk about Shift. We'll analyze the company, their financials, future projections, competition, analyze my position, and what I expect from this company. If you are new to my channel, welcome. Consider subscribing and smashing the like button since it really helps the channel out. Also consider joining my completely free Discord group chat. The link for that is down in the description below. Shift is basically an e-commerce of used cars. They buy used cars, fix them up, and resell them. By doing all this online as an e-commerce, it makes it easier and hassle-free for customers. We all know how annoying it really is or can sometimes be to buy a car in person, go to a dealership, and do all the process using different techniques with the seller to be able to get a perfect deal, and then have to deal with the dealership contacting you every single hour until you buy the car. But with companies like Shift, Vroom, or Carvana, it is a really fast and hassle-free process, and that is what I like because us millennials and younger generations prefer to do everything online than have to deal with someone over the phone or in person. Meaning that these companies will disrupt, in my opinion, the used car industry. Now, something I like about this company is that even though they are small, since they are worth like $700 million, is that they are expanding fast. As you can see, they are not available everywhere. They are mostly in California, Washington, Oregon, and now in Texas. They launched their newest buyer market in Seattle on October 28th, 2020. On November 9th, weeks later, they opened a marketplace in Texas, and on November 17th, they already announced their second region in Texas. Then on December 1st, they announced their fourth seller market in Dallas, Texas as well. That, in my opinion, is huge and very fast growth for such a small company, which means that they are looking to expand massively and be able to grow as their main competitor Carvana has done. Shift is in a very competitive market since they not only compete with their direct competitors Vroom and Carvana, but also with other types of dealerships, even if they do not sell cars online. But let's first analyze Shift financials and then we will compare with Carvana. Shift, during their third quarter, they reported a revenue of $59.9 million, which 88% of that came from their e-commerce sales, which grew 31% year over year. Yes, on a 9-month period, they are down, which I would assume it was because of the pandemic, and maybe during the first or second quarter, they saw a decrease in sales. They reported a net loss of $23.3 million since their margins are still not the best ones, and they spent way more money than last year in selling, general, and administrative expenses, which I would assume most of it comes from marketing. Still, in a 9-month period, they reported a net loss of $54.6 million, which is slightly better than last year. On their balance sheet, they have over $128.9 thousand in cash and cash equivalents, which have decreased massively this year. Still have total assets of $153.4 million since they have $152.3 million in cash and marketable securities held in a trust account. They have total liabilities of only $9.6, almost $9.7 million, which is incredible since that means that they have total liabilities to asset ratio of 0.06 or 6%. Now, take into consideration that this is a company that is currently trading at $8.64 per share pre-market hours and has a market cap of $709.4 million. Now, let's check Carvana. Carvana is currently available in over 30 regions, which means that it is huge and it is in way more markets than Shift. Carvana reported a revenue of $1.5 billion for the third quarter, which massively grew as well, and a net loss of $17.7 billion. Take into consideration that Shift had almost $60 million in revenue and almost the same amount in losses than Carvana. Carvana is currently trading at $258.26 per share and has a market cap of $44.3 billion. Meaning that right now Carvana is 62.5 times bigger than Shift, and it has sales of 25 times what Shift has. With all that said, if Shift does report an excellent fourth quarter with a revenue of about $75 million, which is what is expected, and close the year with the exact same valuation as right now, they would have a price to sales ratio of about 3.3. On the other side, if Carvana do report the revenue that is expected of about $5.35 billion for 2020, they would have a price to sales ratio of 8.2. Obviously, an excellent price to sales ratio is between 1 and 2, but since neither of them are between those ranges, it is also important to know that the less the better for this ratio. Now, remember that you are able to get 4 free stocks with Webull when you open an account with them and deposit $100. This was a limited time offer that was supposed to expire today, but they have decided to extend it until December 31st. So go and take advantage of that free money with a link down below in the description. I do have to say that I have never used Shift before since they are not available in Florida, but I have used Carvana before, and I do have to say that I see potential in the industry and even more with their online car selling part. My boyfriend was selling his car and we went to CarMax and Carvana for a quote to be able to compare it. And have to tell you guys that Carvana gave us a way better deal. CarMax was accepting the car for $9,000 while Carvana $13,000. That's 44% more than what the others were offering, and they still are able to make money out of that. And I have to say that the process to sell the car was really fast and easy. Don't have to go through the hassle of posting it on Facebook, OfferUp, or any other apps, then meet with a lot of possible buyers to end up selling it within weeks or months later. My experience with Carvana during the pandemic was incredible. We applied online, told them all the characteristics of the car, took some pictures, and they gave us a quote. Next day, we just went there, gave them the keys, and that was all. We were done within minutes. With CarMax, it was a headache. We went there for a quote and had to wait like an hour or two for it in the store to then notice it was way less money than what Carvana was offering. What I want to say with all that is that these companies, Carvana, Vroom, and Shift, will, in my opinion, change the way of selling and buying used cars while more and more younger people need a car. Meaning that they are going to disrupt the car buying and selling industry and gain more and more market share with time. Now, I started buying this stock about a week or two ago. It is a small position right now, which I'm planning to increase with time, trying to get a way better entry points. Right now, it represents 1.32% of my portfolio. I have an average cost of $8.94 per share, which means that I am down 1.74% as of today pre-market hours. You guys have to take into consideration that this is a long-term investment for me, which I'm not planning to look at for a long period of time. This is a small company that is trying to grow massively, and it is spending a lot of money in marketing to be able to get noticed by people and to be able to increase their market share with time. I do think that Carvana still has room to grow and Shift even more, since they are in about 5 different regions while Carvana is in over 30. So we have to wait until Shift gets to Carvana levels, or at least very near to it. I do have to say that I expect a lot of volatility in this stock, and we gotta be patient. See what happened with Lemonade. It had a lot of volatility as well, a lot of ups and downs, and a lot of people sold in the downs, and see where we are now. Obviously, Lemonade might go down again, and I will buy more if it reaches to my target price again. That is why you guys have to be patient with these small new stocks with high growth potential, and simply do not panic sell unless something really bad happens to the company, which I don't think it's the case here. Now, remember, I'm not a financial advisor, and you should do your due diligence before investing. Thank you everyone for watching. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Also, join to the free Discord group chat, which the link for that is down in the description below, as well as the 4 free stocks with Webull. Thank you, and see you next time.